Say that you're a videographer making $500,000 in a single year. When you're working with the typical CPA accountant, you're going to end up paying taxes on $400,000 worth of that, which is going to end up getting you to $166,000 in taxes owed to the IRS. So in today's training, I'm going to show you how I would go about generating over $100,000 of tax savings for this particular situation. My name is Harrison Patton. I'm a licensed tax professional that specializes in generating tax savings for fellow entrepreneurs who are in the online business space. I worked at one of the biggest accounting firms in the entire world at PwC back before I left and started my own firm so that I could take the strategies and knowledge that I learned there and apply it to the everyday business owner and help them achieve their entrepreneurial dreams. So now let's get into exactly how I would generate over $100,000 in tax savings for a client just like this. And a quick heads up as we get into this, just so you know, these numbers are for illustration purposes only. This is not financial advice. And of course, if you ever wanted to advance and do something like this in your own business, you need to consult with a tax professional to make sure that it is specific to your own situation. And also, throughout the video, the numbers will not be quite exact because for simplicity purposes, we are going to be using the same tax rate throughout the video. So just wanted to get that out of the way. Now let's get into the savings. So the first strategy that we would be incorporating is making sure that we have the proper entity in place with an S corporation. So if you have $400,000 of taxable income, that's going to result in over $56,000 of self-employment tax. However, when we make the S Corp election, what we do is we split that profit into a W-2 salary and the net profit. And as you can see here on the right side, what we would do is estimate a reasonable compensation for $125,000, which would be paid out to the owner as a W-2, similar to a normal employee's salary. And I got to this $125,000 through just estimating based on research of what it would cost to pay a typical person to perform all of the services that our hypothetical owner would be doing in this situation, which is how we landed at this 125,000, and the remaining profit goes over here. Now, how the tax savings are generated is that the self-employment tax of 15.3% on your profit is only going to be on this W-2 salary. So 125,000 times 15.3% is going to wind up being 17,669. So our tax savings from this situation, originally we had self-employment tax of over 56,000. Now we've got it down to just below 18,000. So we're going to be generating approximately $38,000 of tax savings just from this one simple move. And so this is a really common issue that I see with business owners in the online space, videography, all these places. I see people just not properly doing the S Corp. They might elect to be an S Corp, but then not pay themselves a reasonable compensation. And that's where you miss out on the entire opportunity for all of the tax savings. So now, we have the entity properly set up. So let's move on to something that is very specific for this individual industry and actually going to be able to generate even more tax savings for us. So strategy number 2 is depreciation. So when you are a filmmaker, photographer, content guy, whatever you want to label yourself, you're likely going to be spending a lot of money on equipment. And so as you can see here, we have a huge list of all the different types of equipment that you could be getting, from camera to lighting to audio equipment to computers for the post-production, storage for all the videos and everything, specialty equipment like drones and other things that are just more niche that you could be having to purchase. And so right here, I did some research on the estimated cost of what all of this would be and came out to around 55,000 if you were to buy it all in 1 year. And additionally, most people that I know that are in the filmmaking space or the content creation space, marketing agencies, they're going to be traveling a lot for work. And so one thing that we can do is we can buy a vehicle in our business name and be able to get a tax break off of that as well. And so I didn't go crazy with, the elaborate vehicles like a Range Rover or a G-Wagon, but instead I just went for something more middle of the pack with a Suburban. I did some research. The estimated cost would probably be around $80,000. And we're going to estimate that we're going to be using this for 50% business use. So 50% personal, 50% business. So times it by 50% to get to $40,000 cost. So from our equipment and our vehicle, we get to a total amount of $95,000 worth of expenses that can be depreciated. Now, the next thing that's really important to know is that this can either, depending on the type of equipment or the type of vehicle, so they each have a depreciable life. What this means is the cost can be spread out over that depreciable life. For things like equipment, it's 5 to 7 years, and for vehicles, it's typically a lot longer than that. Normally, they range in the 7 year range, but what the IRS actually allows you to do is there is a thing called Section 179, which allows you to expense all of this up in 1 year, up to a couple $1 million, which in this case, if this is all we have, we don't need to be worrying about. So we're going to assume that we're going to use that. Anything over that, you can actually use bonus depreciation, which is another way to accelerate the depreciation. Accelerate is just the fancy term for saying put it all together in 1 year rather than spreading it out over several years. And so we're going to assume that we're going to take this entire 95,000 in the entire year. Once again, we're going back to our simplified tax rate of 35% from the original beginning tax rate. And this is going to actually be generating us over $33,000 in tax savings. So now you can see that we've already generated a huge amount of tax savings just from these two strategies. But next I want to get into something that I see marketing agencies and content people, filmmakers using a lot, but not always taking full advantage of. So the third strategy that I want to get into is travel, right? So a lot of people know that you can write off things for travel, but they don't know exactly what all qualifies. And so I put in 3 different categories that we're going to break down. So the first one is client shoots. So say you're having to go travel to go shoot for a client, right? And I just did some reasonable numbers. I said we're going to estimate 4 to 5 in a year, the average cost per each trip being about $1,200, giving us a total cost of $6,000. Number 2, I put scouting trips. So this is one that I don't see utilized as much because people think the client isn't with me, so it doesn't count. But if you're going to scout out a location to actually do filming, to do photography, whatever you're doing, if you're going to scout out a location, you're actually allowed to count that as a business trip as well. And so, once again, estimated 2 to 3 trips, average cost of about $1,000, total cost probably going to be around $2,500. And lastly, the third type of travel, and this applies more broadly to other types of industries if you're watching this from another industry, but once again, going back to the filmmaking industry, they attend a lot of conferences and masterminds. So that might be to go learn more about your particular niche and your particular type of filmmaking. Or you might be going to a general business mastermind. Whatever it may be, those are allowed to be written off for travel as well. So we have 1 to 2 events. These are probably going to be a little bit more costly. We'll say 1,500 to 2,500, total cost of $3,500 just for the travel. This is not including the cost of the masterminds, which we might be talking about here in a little bit. And so, what actually qualifies to be in your travel expenses? So, these are just a few quick things. So, hotel, of course, that counts as being able to be a travel expense. Airfare, so anywhere you're flying, whether it be private or public, if you got it enough to fly private, by all means, go for it. But both of them count. Next, Uber, any taxis, Lyft, whatever you want to, whatever ground transportation you're using. It also includes rental cars if you're renting a car. All of those are included in our travel expenses. So, with our assumptions and estimates over on the left side, we're getting to a total yearly travel expenses of $12,000. Now, the tax savings, once again, using our simplified tax rate of 35%, is going to be generating over $4,000 of tax savings from our travel. So, now a quick note before we move on to the next strategies. With travel, just like anything else, you need to be making sure that you're substantiating all of your deductions. And substantiate is a fancy term just to say you're proving that is for business. So for travel, you just want to keep receipts, logs of what the travel was for, what you did, who you met, things like that, just in case the IRS ever comes knocking and wants to question your expenses. You can just show them all of your travel logs, everything like that, and you're clear, good to go. They should get off your back pretty quickly. So these first 3 were kind of the big 3 that I identified that I think that a person in the filmmaking industry could really take advantage of. But now I kind of want to get into a couple more that are just going to be more quick hitters that might not individually generate as much tax savings, but added up, I think they can make a huge difference on your tax bill. So, strategies for quick hitters. So, first, we have the home office. I know most people that are in the content creation marketing space, they are actually working from home. And so I think that this is a huge thing that is often overlooked in the industry. So, a couple notes here. I did the simplified method. There's also an actual expenses method that is a little bit more detailed, that allows for room for more deduction, but does come with the cost of having to have more documentation and a little bit more precision on your calculations. So I just went with the simplified method for this video. 300 feet, saying your office is 300 square feet. You get, the IRS allows for $5 per square foot, getting you to this 1,500, which generates $525 of tax savings. So next, moving on to the next thing that I think can make a huge dent is software. So whether you're using some sort of editing software, or anything in the Adobe suite, you're using Dropbox for storage, if you have a client portal, things like that, anything that you are using that is a software subscription is allowed to be taken as a business deduction. And so I'm going to estimate, nowadays this is a bigger expense. So we're going to say $3,000 worth of software. And this is going to generate over $1,000 on its own of tax savings. And a quick aside about the home office deduction, once you're an S Corp, you actually have to make an accountable plan in order to qualify for the deduction. So there is an extra little step added on after making the S Corp election that we talked about earlier in the video. That's outside the scope of this video, but I'm sure that you'll be able to find one on my page, and I'll link it down below, about me talking about the home office deduction and specifically when you make the S Corp election. So be sure to check that out so you get the tax savings. Third thing on the quick hitters, health insurance. So if you are paying for your health insurance, you're allowed to run it through your business and it would come out on your W-2 that we pay with the S Corp salary that I mentioned earlier. And so health insurance can be actually pretty costly. So it's awesome that we get to run this through our company and actually generate some tax savings. So I'd estimated about $9,000 in the year for health insurance. Seems reasonable because it's pretty expensive nowadays. And this is actually going to generate us over $3,000 of tax savings. Next thing, cell phone and internet. So you might not only use your cell phone or your internet to run your business, right? You might also be having calls with your family, or you might be using the internet to watch Netflix occasionally. And so you might not get 100% of these off of your tax bill, but what we can do is we can estimate the business use. So for here, I said 60%. At about 200-ish dollars a month, that's going to generate over $1,000, $1,400 in a year of an expense, which is going to wind up being around $500 of tax savings. So not huge, but it's something that you're already using, something that you're already paying for, so you might as well get the tax deduction for it. Fifth one, and this is a huge one in terms of tax savings, but also growing wealth year after year and letting it compound upon itself. So retirement. So what we can do is open up a solo 401k or a SEP IRA. Different contribution limits, different rules around these, but for the sake of this illustration, we're going to open up a solo 401k for our entrepreneur here. And so the actual maximum amount is a little over 70,000. So you can actually contribute a lot more than we have here, but we went with a reasonable estimate and said that he's going to contribute $30,000 within the year. What this does is generate over $10,000 of tax savings. Super powerful move. This is one of my favorite things, and also one of the things that I see the most underutilized in the entrepreneurial space. You simply sign up for a retirement account and you get to contribute money that takes away from your tax bill. It reduces your tax bill down while also being able to invest in things that'll grow it over time. If you did something like this, $30,000 a year for 20 years, you're going to end up having a couple $1,000,000 just if you put it in simple S&P 500 funds. So super powerful move. Next one, education. So anything that is educating you further in your pursuit of business and making you more skilled, having more expertise in your industry is able to be actually taken as a write-off. Now, few caveats with this. If it gets you a license that is a requirement, you're not allowed to take that as a deduction. Or if it's simply just reading books, those are something that's a little bit harder to argue. But as I mentioned earlier with the travel section, if we're traveling to masterminds or traveling to conferences that are going to teach us more about our craft, those types of things are eligible to be taken as a business expense because they help you generate more revenue by leveling you up as an entrepreneur. So I estimated $2,500 worth of simply paying for the masterminds, paying for the education, which will generate us around $875 of tax savings. Now, this last one, super powerful, and I would be willing to say most businesses qualify for this, especially my filmmakers and my videographers. Those industries definitely qualify for this. And this is the QBI deduction. What this means is the qualified business income deduction. So if you are self-employed, you're actually able to take a deduction after you get off your business return on your personal return. I'll explain a little bit more about this, but try to keep it high level so we don't go too in the weeds. So essentially, the IRS allows, if you're an entrepreneur, to have a 20% of your profits deduction once you're actually doing your personal return. So I'll explain this a little bit more in a minute, but for now, we're going to estimate that off of this 20% of profits deduction, we're going to get around $6,000. Now, the reason I can't give a precise number right now is because, like I said, it's post final net income from your business. Might be a little confusing right now, but we'll get into it here in a minute and it'll be a lot more clear. So now, the moment we've all been waiting for. Let's take all of our extra deductions that we've just thought of and incorporated into this business, and let's add them up and see how big of a difference it is making. Okay, so our final tally. So as you can see, we have all of our deductions in this first column, and this is the expense amount, meaning this is how much comes off of the revenue minus expenses to get to our net income. So this is that middle piece, the expenses. And this is the estimated tax savings from each of the individual moves. And so as you can see, it's the same numbers we had earlier as we're going down here, and then same number of tax savings here. So right here, we generated over $279,000 of additional expenses. And the thing is, a lot of these are things that we're already buying. They're already being things that are purchased. We're just making sure that they're accounted for and being in our business from our personal life, or just making sure that we're accounting for it properly so we get the deductions. So as you can see right here, we are already at $99,000 of tax savings. But what I'm thinking is we definitely want to make sure we're over that $100,000, that six-figure amount tax savings. And I have a hunch that this QBI deduction is going to get us a lot more than that $6,000. So now let's get into a side-by-side comparison to see exactly what the benefit is of working with a tax strategist rather than just a regular accountant. So here, as you can see, we have our final side-by-side comparison. And so this first column, which I apparently failed to draw the lines for, is the original situation. So we had $500,000 of revenue. We only had $100,000 of expenses, getting us to a net income of $400,000. That taxable income is going to be at the 35% tax rate, which is why we have used that the whole video. And so what we're going to be doing, I use the actual tax tables because it's not actually 35% on the whole thing, but for simplicity's sake, just treat it as it's approximately 35%. Federal tax owed is $109,000 with self-employment tax of $56,000, getting us to a total of $166,000 in taxes to the federal government. Ouch. Sounds painful to me. But now let's get into when you are using a tax strategist. So same $500,000 of revenue. And of course, we'd identify the same original expenses that were already on the books and already, if a normal accountant was going to identify them, a good tax professional, good tax advisor, tax strategist would be noticing them as well. And so I just went ahead and included them as well. But we also had $279,000 of new expenses, getting us to a net business income of $120,000 right there. And so here's where that QBI deduction comes in. So what you would be doing, and this is a simplified version of the calculation, there's a few more small steps. Essentially what you would be doing is taking 20% of this $120,000 to get to our QBI deduction of $24,000. So total taxable income is $221,000. Now, you might be asking how we got there. Let's not forget it is the $120,000 of net business profit minus this QBI deduction of 24, but we also have to account for that salary, the W-2 salary that we paid ourselves from when we made the S-corp election, which is why it is over the 221,000. So essentially it's this 120 minus this 24 plus the 125 from earlier. So hope that makes sense. It's just a simple add the salary, add the business profit, subtract out the QBI deduction. And so this actually moves us down into the 32% tax bracket, which is a huge jump down, and it actually makes a huge difference on the tax bill, as you can see. So federal tax owed on this amount is going to be $47,000, just shy of $48,000. Self-employment tax is where we see a huge drop, going down to just below 18 grand right there. And so what we're going to be end up paying is $65,595 in taxes. Still a lot, still not ideal, but we also can incorporate more strategies. We can find more ways to lower that taxable income. But for the sake of this example, I just wanted to keep it short and brief to kind of give you an idea of what's possible. So as you can see here, our final tax savings is over $100,000. And as you can see, this guy right here, mighty happy from his tax savings. So in this situation, we talked about the same exact person. The only difference is that the first original scenario was working with just an accountant that takes what you give them and makes a tax return out of it. The second situation was somebody who is working with a tax strategist. They have somebody in their corner. Think of a boxer with his coach in the corner. That's what a real tax strategist does in the role that he plays in your business. And as you can see, it is well worth the investment because we generated over $100,000 in tax savings. Now, if you're looking to identify more potential savings to even get that $65,000 closer down to zero, what you can do is you can look down in the description. I have my free tax deduction checklist that outlines more deductions and more write-offs that you can be looking for in your business and in your life. I also have a link in that checklist that has a brief video of me kind of walking through the video and kind of explaining different parts of it. So be sure to check that out down below. So I hope you found this video helpful. And if you did, be sure to subscribe. I have more tax content coming soon to help you as an entrepreneur achieve your entrepreneurial dreams without having to pay a lot of money to the IRS. If you have any questions, be sure to leave them down below as well. I'm happy to answer every single one of them, and I hope you enjoyed the video overall. So that's it from me today. As always, never stop your relentless pursuit of continuous improvement, and I'll look forward to us talking again soon.